Welcome to the Radio Revenue Podcast. Today, our deep dive is all about the Ralph Lauren Corporation. We're going to really pull back the curtain on this iconic luxury brand. We'll explore how it generates revenue, how it manages its huge global enterprise, and also how it's strategically navigating the future. Think of this as your shortcut, really, to understanding its core strengths, its financial health, and where it's headed. All our insights today, they come straight from the company's recent Form 10-K. That's their big annual financial report filed with the SEC. So it gives us a pretty robust insider view into their operations, their financials, and their outlook. Okay, let's unpack this. When most of us picture Ralph Lauren, we conjure images of timeless American style, maybe a classic polo shirt.
Right, that's the immediate association for many.
But this deep dive reveals something far more intricate. It's a truly global business with a surprisingly dynamic approach to revenue. And, a fascinating challenge, too. How does a brand built on enduring heritage keep innovating and growing in today's world? It's changing so fast.
That really is the core question, isn't it? What's truly remarkable here is how they managed to maintain that instantly recognizable iconic image, while at the same time continuously diversifying across geographies, across distribution channels, adapting to a market that's always evolving. This 10K, it really lays bare the strategic decisions that underpin their impressive financial performance. It shows how they balance that tradition with transformation.
And it all started way back in 1967 with Mr. Ralph Lauren himself. What was that foundational vision? The one that's allowed this brand to inspire the dream of a better life through authenticity and timeless style for nearly 60 years now.
Yeah, that kind of longevity isn't accidental. Absolutely. That purpose, that's the bedrock. But it's very rigorously complemented by a really intentional diversification strategy. They actively mitigate risk and they drive growth by creating what they actually call a dynamic balance. That's across different geographic markets and distribution channels. It's not just about selling clues, it's really about strategic market penetration.
Okay, so let's talk about that geographic diversification then. Looking at fiscal 2025 net revenues. North America, that's the U.S., and Canada, it accounted for, roughly 43%?
Around that, yeah.
And Europe, which includes Europe and emerging markets, brought in a pretty substantial 31%. And Asia, covering Asia, Australia, and New Zealand, contributed about 24%.
And what's particularly insightful about those figures, I think, is that nearly a quarter of their revenue now comes from Asia. Plus, when you factor in those other non-reportable segments, mostly royalty revenues from global licensing, like Ralph Lauren and Chaps brands, it brings their total non-U.S. revenue to about 57%. That's huge.
Yeah, over half.
Yeah. So this substantial international mix suggests, that Ralph Lauren is strategically insulated somewhat from economic hiccups in any single region. And it positions them well to capitalize on luxury market growth, especially in Asia. That diversified base offers significant stability compared to, say, more domestically focused brands.
That really highlights their global nature. And within that sort of sprawling tapestry, they've cultivated distinct core brand platforms, right? Each with its unique positioning.
Precisely. You have the absolute pinnacle of luxury with Ralph Lauren Luxury. That includes collections like Purple Label and the women's collection line. These are predominantly made in Italy. Purple Label specifically is known for its exquisite Savile Row tailoring for men, just the epitome of high-end craftsmanship.
And then there's Double RL. That's named after his ranch in Colorado, right?
That's the one. It pays tribute to the American pioneering spirit. Think authentic American-made selvage denim, rugged, timeless stuff.
It's a completely different aesthetic. Really shows their range.
Totally different. And we can't forget Pink Pony. That's their worldwide initiative in the fight against cancer. A percentage of sales from Pink Pony products goes to support cancer-related programs globally, benefiting local charities. And of course, it features that iconic pink polo player.
Connect the brand to a really powerful social cause.
Exactly.
And finally, there's the Ralph Lauren brand. This seems like a broader women's lifestyle collection. Sportswear, denim, dresses.
Yes, and accessories. Footwear, too.
Yeah.
And the Lauren home line extends that classic Ralph Lauren style into more accessible bath, bedding, and home products. It truly speaks to a broader consumer base, beyond just high fashion.
Okay, so shifting gears a bit. With such a diverse brand portfolio, how does Ralph Lauren actually get its products into people's hands globally? It's clear they use a pretty sophisticated multi-channel business model.
That's right. Their integrated retail channel is really central to their direct-to-consumer approach. As of March 29, 2025, they had a vast global physical presence. We're talking 564 retail stores and 671 concession-based shop within shops.
That's a lot of locations.
It is. Though it's worth noting they did strategically decrease their overall store and concession count by 20 in fiscal 2025, mostly consolidating some Asia concessions and optimizing lower-tier outlets in North America.
And those outlet stores, they play a very specific strategic role, don't they?
They do. They reach additional consumer groups, maybe more value-conscious ones, and they serve as a secondary distribution channel for, excess or out-of-season products. They operate 312 outlets worldwide.
Okay. And the concession-based shop within shops, that model's a bit different.
It is quite unique. Ralph Lauren actually retains ownership of the inventory until it's sold to the end consumer. And often, it's their own employees handling the sales right there within the department store.
Ah, so they keep more control over the brand experience that way.
Exactly. Even within another retailer space.
And there's the wholesale business.
Right.
That also sounds massive, reaching department stores, specialty stores, even golf shops, and digital partners globally.
Absolutely huge. To give you a sense of scale, they operate in over 9,400 doors worldwide, mostly specialty stores.
Wow.
Although it's important to note the concentration here. Sales to their three largest wholesale customers made up about 12% of total net revenues in fiscal 2025, and about 70% of those key wholesale sales were in North America, 30% in Europe. They also maintain major showrooms in places like New York, London, Milan, and increasingly use virtual showrooms, too.
Makes sense. And the product licensing model, that sounds like a smart way to extend the brand without massive capital outlay.
It really is. They leverage their trademarks through partners for categories like eyewear, fragrances, home furnishings, and they earn royalties.
Yeah, you mentioned big names there, like L'Oreal for fragrances.
L'Oreal, BBC International for some footwear, Luxottica for eyewear. Yeah, major players.
Okay. And then there's a digital ecosystem. You said this is a critical investment for them.
Oh, absolutely. It's not just an add-on. It's fundamental to their whole integrated global omni-channel strategy. It spans both their own channels and third-party partners. It's about meeting the consumer wherever they are digitally.
So that includes their own websites, their digital flagships, mobile apps like the Polo apps in the US. But what really grabs my attention is how they're also partnering up. Wholesale partner websites, digital pure play sites. You mentioned reaching younger audiences.
Exactly, broadening their reach. And they're engaging in social commerce, even exploring third-party gaming platforms for digital apparel and virtual brand experiences.
Virtual gaming platforms for Ralph Lauren. That makes you wonder, doesn't it? How does a traditional luxury brand make that leap?
It truly does. And it raises a really important question. How do they manage brand consistency, the customer experience, across such a vast and, frankly, diverse distribution network? From high-end boutiques to digital marketplaces, even virtual worlds.
Yeah.
Their omni-channel strategy, especially the investment in these connected retail capabilities, is absolutely crucial for this.
Right.
These enhancements bridge the physical and digital. Things like online appointment bookings, digital clienteling, endless aisle where a store can access online inventory, buy online ship from store, pick up in-store, same-day delivery, mobile point of sale, contactless payments. It's all about creating a seamless, modern luxury journey.
Okay, so let's talk about how Ralph Lauren is navigating the future. Let's focus on their strategic initiatives and how they're managing risks. They introduced a current 3-year growth strategy, right? For fiscal 2023 to 2025. Back at their September 2022 Investor Day.
That's right. And they're already planning their next Investor Day for September 2025 to present the updated strategy. So that continuous forward planning is definitely key.
And underpinning this is a truly significant undertaking.
Yeah.
Their Next Generation Transformation Project, NGT.
Yeah, the NGT project. This is a large-scale, multi-year global initiative. It's designed to profoundly change how they operate internally.
And the core goal.
The core goal of NGT is to transform their entire operations, really, and enable a strategic pivot towards a global direct-to-consumer oriented model. It involves redesigning end-to-end processes, implementing a whole suite of new technology systems globally. It's a major internal overhaul.
And the expected benefits.
They expect substantial benefits, significant process improvements, synergies across merchandise buying, planning, procurement, inventory management, retail and wholesale operations, financial planning. All this should lead to, optimized inventory and a much faster reaction time to consumer demand.
That sounds crucial.
It is. They did incur about $25.2 million in charges just for the preliminary phase in fiscal 2025, which just shows you the scale of this investment.
Right. Now, beyond internal transformations, they face a whole host of external challenges and risks, like trade policies, tariffs. The recent U.S. announcement about potential widespread tariff increases that universal 10% on imports, plus maybe country-specific ones. That sounds like a significant risk. Why is it so critical for Ralph Lauren?
It's critical because, get this, approximately 96% of their products are manufactured outside the U.S.
96%.
Yeah, with significant chunks coming from Vietnam, Cambodia, and China. So new tariffs could directly hit their cost of goods. That could mean higher prices for you, the consumer, or squeezed margins for the company. Plus, there's the broader risk of, retaliatory tariffs and the impact on global markets, inflation.
And supply chain disruptions.
Yeah.
That seems like another constant concern for any global brand these days.
Oh, absolutely. We're talking about everything from capacity constraints, factory closures, labor shortages, raw material scarcity, port congestion, plus specific events like the Red Sea crisis, which had recent impacts, but also regulations like the Uyghur Forced Labor Prevention Act, the UFLPA,
Right.
which aims to prevent forced labor in supply chains,
Mhm.
and CIETSA, the Countering America's Adversaries Through Sanctions Act. Both add layers of complexity and potential restrictions to their global sourcing.
So how does the company actually mitigate these pretty significant supply chain challenges?
Well, they're being proactive, diversifying their supply chain geographically so they're not too reliant on one area, practicing disciplined inventory management, leveraging supplier relationships to try and reduce costs, sometimes changing the country of origin for production, and taking strategic pricing actions. It's really a multi-pronged approach to try and stay resilient.
And then there are the broader macroeconomic factors like potential recessionary periods that directly impacts consumers' willingness to buy luxury goods, right?
Definitely hits discretionary spending. Plus, competition is incredibly intense worldwide, including from those nimble, often internet-based companies.
So what are the key competitive factors now?
Well, for luxury brands today, it goes beyond just brand recognition and product quality, though those are still vital. It includes pricing, how effective their marketing is, celebrity relationships, how user-friendly their digital sites are, and maybe most importantly, how well they adapt to new tech like data analytics, AI, machine learning. That race for technological advantage is constant.
And cybersecurity risks?
Mhm.
Given how much they rely on IT systems, that must be paramount.
Huge. They face sophisticated cybercriminal schemes, phishing, ransomware, and increasingly AI-driven attacks.
So what are they doing to protect themselves?
Their efforts seem pretty comprehensive. They use the NIST framework, that's a set of cybersecurity best practices. They employ a defense-in-depth approach. They run ongoing awareness programs for employees, conduct regular audits, maintain a robust incident response plan, and they hold cyber liability insurance.
Okay.
And while they report no material incidents, ongoing vigilance is crucial. They have strong board and audit committee oversight, led by their CISO, their Chief Information Security Officer.
So pulling all this together, what does it really mean? Ralph Lauren is bidding big on tech, on that direct-to-consumer model, but they're also navigating a really choppy global economic and political landscape, plus these evolving digital threats. It sounds like a high-stakes game.
It is. Innovation and resilience are absolutely paramount. And if we connect this to the bigger picture, their ability to successfully pull off that NGT transformation while managing these diverse external pressures, tariffs, supply chain issues, cyber threats that will be critical for their long-term profitability and market position, it really highlights that constant tension, doesn't it, between internal innovation and external risk. How adeptly they manage that tension will likely define their future success.
Beyond the financials and operations, it's truly impressive to see how they seem to be actively building a culture, not just selling products, both internally with their employees and externally through these ambitious sustainability goals. It seems like it's about more than just profit. It's about purpose.
Which, frankly, is increasingly expected by consumers today, especially in luxury.
Yeah, I agree. It almost redefines what it means to be a modern luxury brand. Their detailed approach to human capital, to global citizenship, it reflects a really proactive stance. Proactive towards potential risks like talent retention, and also towards those evolving stakeholder demands for ethical operations. It absolutely underscores that reputation and values. They're as critical as pure financial performance for long-term success now.
Let's dig into their human capital a bit. As of March 2025, they had around 23,400 employees globally.
Roughly, yeah. about 15,000 full-time, 8,400 part-time. It's a truly global workforce, about 9,800 in the U.S., 13,600 internationally.
And their commitment to diversity and inclusion seems quite clear from the numbers. The numbers are interesting. 64% of their global workforce identifies as female, 36% male. And notably, in the U.S., 59% self-identified as belonging to an underrepresented race or ethnic group. Their belonging and equity strategy focuses on fostering an inclusive culture, enabling open dialogue through things like employee impact groups, and providing learning and development programs like Situational Leadership 2, purpose-driven coaching. It's not just about the numbers, it's about creating an environment where talent can really thrive.
And when it comes to employee well-being and benefits, they've clearly made some significant investments there too.
They have. They offer comprehensive support through their THRIVE Global Wellness Program that covers physical, emotional, social, financial aspects, includes educational webinars, wellness journeys, that sort of thing.
And I saw some enhanced benefits starting January 2025.
Yes, those are particularly interesting. For U.S. employees, it includes free additional cancer screening coverage above the national guidelines and free virtual consultations with Memorial Sloan Kettering for cancer diagnoses. They also significantly expanded benefits eligibility for part-time employees just 1 year of service, regardless of hours worked, and enhanced medical, dental, vision options. It really demonstrates a deep commitment to employee welfare, recognizing that, a healthy, supported workforce is a productive one.
And this all seems to tie into their overarching global citizenship and sustainability approach, which they call timeless by design.
Aptly named, I think. It seems deeply integrated into their purpose, aiming for a better future. And it's structured around 3 key pillars.
Okay, what's the first one?
The first pillar is create with intent. This isn't just marketing fluff. It's about integrating circularity, designing products to be worn, loved, passed on, reducing waste. It also covers their thoughtful choices and sustainable materials, focusing on quality, durability, environmental impact, and ensuring ethical operations and environmental sustainability in their value chain. Transparency, traceability, it's built in from the ground up.
Yeah. And the second pillar?
The second is protect the environment. This really addresses their operational footprint, covers climate, with clear greenhouse gas emission reduction targets, water stewardship, reducing consumption, improving community access, waste management, minimizing waste, diverting from landfills, and chemical management monitoring and reducing hazardous chemical use.
Got it. And the third?
The third pillar, champion better lives, brings together the belonging and equity and employee well-being aspects we just discussed. It also includes their extensive community engagement and philanthropy through the Ralph Lauren Corporate Foundation, and critically, ensuring rights and empowerment in the supply chain, ethical operations, risk assessment, life skills programs for factory workers. It's a very holistic approach. Signals that their values are really embedded in every part of the business.
Of course, all these ESG initiatives, while crucial for reputation and, well, long-term viability.
Yeah, they
come
come with challenges.
That's right.
Absolutely. Increased stakeholder focus, the difficulty of meeting sometimes diverging expectations about corporate ESG, potential increased costs for compliance reporting. It's a complex tightrope to walk.
Okay, now let's talk about the bottom line, the numbers. They tell a pretty compelling story, don't they?
They really do.
Strong revenue growth, improved profitability, a very healthy cash position, even with all those global headwinds we talked about. And they seem clearly committed to returning value to shareholders.
Yeah, what's particularly insightful, I think, is the balance they strike. They're making these huge strategic investments like that NGT project, but they're also maintaining robust shareholder returns, dividends, buybacks. It signals real confidence in their long-term growth trajectory despite a pretty dynamic and competitive market. Understanding these financial levers is absolutely key to grasping their overall business health and their future prospects.
Let's break down their fiscal 2025 performance compared to fiscal 2024. Net revenues increased by a solid $447.6 million, or 6.8%, reaching over $7 billion.
$7.079 billion, yeah. And on a constant currency basis, it was even stronger, a 7.7% increase. That shows real organic growth.
And their gross profit, also up significantly.
up by $421.1 million, or 9.5%, to $4.853 billion. And critically, their gross profit as a percentage of net revenues improved by 180 basis points.
So 1.8 percentage point.
Exactly. From 66.8% in FY24 up to 68.6% in FY25. This isn't just growth, it's profitable growth.
Yeah.
Driven by a favorable geographic and channel mix, high single-digit average unit retail growth, meaning the average price people paid went up.
AUR, right.
Plus lower cotton costs and a favorable product mix. It signals strong pricing power and pretty effective cost management.
Okay. What about expenses? Selling, general, and administrative SG&A.
Those increased by $262.5 million, or 7.3%, to $3.863 billion. As a percentage of revenue, it ticked up slightly by 30 basis points, or 0.3 percentage points, to 54.6%. That was mainly due to that geographic channel mix again, higher compensation costs, and planned marketing investments to drive brand engagement.
But despite those increased expenses,
Yeah.
operating income surged.
Yeah, surged is a good word, up by a healthy $175.7 million, or 23.2%, hitting $932.1 million. And the operating income margin also improved impressively by that same 180 basis points, 1.8 percentage points, up to 13.2% from 11.4% the year before. That kind of operating leverage, it shows their ability to translate revenue growth into disproportionately higher profits. It's what you want to see.
And net income followed suit, increased by nearly 15%.
Up 14.9%, yeah, to $742.9 million. And net income per diluted share increased by $1.90, reaching $11.61. That's a strong indicator for shareholders.
So, okay, what about comparable store sales growth? How did that look?
Strong across the board, really. Reflects a healthy appetite for the brand globally. Total comparable store sales were up a robust 10%. Digital commerce was up 9%, and brick and mortar was up 10%. So strength across all their consumer touchpoints.
And breaking that down by region.
North America retail comps grew 6%. That was plus 2% digital, plus 8% brick and mortar. Europe retail saw impressive growth of 12%. Overall digital was up 25%. Brick and mortar up 11%.
Wow, 25% digital growth in Europe.
Pretty remarkable. And Asia retail also grew 12%. Overall digital up 13%. Brick and mortar up 12%. It's clear their investments in digital and global expansion are paying off.
Okay, and their financial condition. Liquidity, how healthy are they looking?
Very healthy, actually. As of March 29, 2025, they were sitting on a strong cash position, $1.922 billion in cash and equivalents, plus another $160.5 million in short-term investments. Their net cash and short-term investments actually increased by nearly $300 million from the year before, reaching a robust $940.4 million.
And cash flow from operations.
Generated an impressive $1.235 billion in fiscal 2025, which is fantastic.
What about debt?
On the debt side, they have about $400 million in senior notes due pretty soon, September 2025, and then about $750 million due further out, June 2030. Importantly, there are no financial covenants on those senior notes, which gives them flexibility.
And they have a credit facility, too.
They do. A global credit facility, a $750 million revolving line of credit, which they can expand up to $1.5 billion. And crucially, they had no outstanding borrowings against it as of March 29th, 2025. So yeah, signals a very healthy liquidity position, significant financial flexibility to fund growth or, weather any economic storms.
And for shareholder returns.
Yeah.
The board clearly has confidence. They increased the quarterly dividend twice in short succession.
They did. Upped it from 0.75 cents to 75 per share in May 2024, and then bumped it again to our 291.25 per share in May 2025. 2 increases in about a year.
That's significant. And share repurchases.
Also active there. They repurchased about $481 million worth of common stock. That's 2.3 million shares in fiscal 2025. And the board approved an additional $1.5 billion stock repurchase program in May 2025.
Wow.
Yeah, it indicates continued strong confidence in their stock value and a deep commitment to enhancing shareholder value. These actions really reflect a management team that's effectively balancing those strategic investments with direct returns to investors. So here's something to think about. Consider this. In a world that's constantly chasing the next fleeting trend, Ralph Lauren is really committed to timeless style, to products designed to be worn, loved, and passed on through generations. How effectively can a luxury brand, one that's built on such enduring aesthetics, continuously adapt to rapid technological shifts, evolving consumer demands, geopolitical uncertainties, while still maintaining its core identity and driving future revenue growth? It's a fascinating balancing act.
It was Revenue Radio Podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.